Hi, this is Dave, and welcome to the weekly market recap. Closing out the week for Friday, February the 8th, 2013. I'm recording this video on Sunday the 10th. So let's just start out with the Dow. It's probably going to be a shortened video this week compared to some of the longer videos I've done over the last several series over the last several weeks, for the simple fact that there just wasn't really a lot going on in the markets this week. So the big news, if you could call it that, this week is we just really have been sitting in this tight range here on the Dow futures. Taking a look at the Dow futures on the daily chart, starting out as we usually do between 1395, let's say, and 13825. So we've been in a humongous 125 point range in the Dow, sarcasm intended, and we're really just setting up this this sort of box play between this green line of support and this red line of resistance. So really not much to report here. Just it looked like on Thursday it looked like we were going to break through the bottom and get some kind of a pullback at least to this 21 period exponential moving average, but we just haven't gotten that. So the question is going to be, are we going to go and test the 2007 2008 highs? And let me just switch over to the other chart of the INDU, which will give us a cleaner picture. So the question is, are we going to test those these multi-year highs going back, that magnet area that we were talking about from last week's video, or are we just going to pull back at some point? At this point, we really need to see a break of that box. So let me just change this to a weekly chart to get better perspective and go back 10 years. So here we are, really close to these levels. These levels back in 07, and I believe it was October of 07, if I'm not mistaken. So here we are today. So we really have, I think the high was 14,198, which is sandwiched in here, 14,198 in the Dow Industrials Index, and we are sitting here. It's really hard to write with a mouse, but we are sitting here at 13,992, I think, is where we closed the session on Friday, 13,992. So there's still potentially another 198 points of upside in the Dow Industrials. At this point in time, we are still bullish. We're still in an uptrend. To me, this area up here looks like a swing point. I'm just going to switch back to the daily chart, and apologize, I'm a little bit slow on the draw today, but let me just go to a daily chart here. If you look at a daily chart, I mean, if you look at these kinds of moves, you see an up move and then a pullback, an up move. This move looks a little bit overdone to me, but it's not to say that it can't come up and test that 14,198 area. We really just need to break out of this this sort of consolidation area here. You can see it on the chart here, that consolidation box, and break one way or the other. So that's kind of all we have in the Dow. Let's switch over to the S&P futures. This was the INDU chart, by the way. Switch over to the S&P futures, and the S&P futures look a lot stronger than the Dow from just from a chart perspective, and it looks like 1540-ish, 1535, 1536 is a potential target if we break out to the upside. And that's if we break out to the upside. Everything is really overdone. You can see on these charts too, the MACDs are starting to roll over, which isn't to say that they'll necessarily the charts will necessarily roll over, but you can see that the MACDs are getting a little bit toppy, and you could see that let's just go back to the Dow futures. The MACD's looking a little bit toppy here. Stochastics have been looking toppy for a while, and if we go back to the INDU, Same story. It looks like the MACD is ready to kind of roll to the low side. So until that really happens, I mean, it's not really a cause for alarm, except to note that it is looking a little bit toppy up here. But that's not to say we couldn't get a spike off to the high side to retest those highs. So at this point in time, I mean, really, from a swing trading perspective, there's not a heck of a lot to do, because even if you do go up and test the upside, big deal. The risk reward isn't really, in my opinion, I'm not really looking at a trade, and I'm specifically not interested because the risk reward for me isn't there, and there just doesn't seem like a lot to do. So let's just look at the NASDAQ futures. NASDAQ futures are holding that 618 that we identified going back, several weeks. But there's really not a heck of a lot to do here either, in my opinion. So the stock indices are not looking very interesting. And then if we go and look at let's take a look at the dollar index. So the dollar index in last week's video was, I think I described it as holding on by two fingers to support. And, we found support down here. And now we're pushing back into the upper end of where resistance is, and we're just above the 80-20 in the dollar index. So this looks like it's breaking out of this wedge, but I mean, really, you could even turn this into a box. This is really turning more into a sideways kind of box play consolidation. So as long as we're holding support down here, at somewhere in and around 78, 85, 79, the dollar index is just going to kind of keep going sideways by the looks of it until it really breaks one way or the other out of this major consolidation area. But if the dollar index holds, then everything will sort of stay the same. If the dollar index makes a significant move lower or higher, that's obviously going to affect the major markets. So let's take a look at the euro. So as would be expected on the converse of the dollar, the euro finally found some resistance up around $1.37 by the looks of it, $1.3683. Found some resistance and pulled back, but we're still above the $1.3282 support. We're still stair stepping higher. I'm not sure if this trend line is actually broken, because you can almost look at this like, you've kind of got a secondary trend line there. So, as long as that remains intact, the euro is still, fairly bullish. I think the strong support on the euro, I would say, is probably in and around these swing points. This congestion area around $1.32, $1.3189. That seems like the the major support area. So if I were going to get short the euro, thinking that it's kind of had its move, I wouldn't really want to do that until it really decisively broke this level here, in my opinion. So really not much to do in the euro either this week. So let's take a look at quickly some of the commodities. There's just really not a lot going on in the markets this week. I'm not really interested in any potential setups or any of the charts. It's really just a humdrum week. But let's take a look at some of the commodities. Let's start off with crude oil. So crude oil still looks more bullish than bearish, but it really has challenge points around this 50% retracement from the major high to low that we've been talking about, in some of the past videos. I'll just zoom out, for those who maybe have not seen those videos. So we have, it's not going to work. We have this major high, this major low, 50% retracement into that area, resistance around $97. I think the major resistance is around 100, 101. So there's really not much going on in the crude oil either. Let's take a look at natural gas. Natural gas futures. For some reason I can't get my charts lined up very well today. Okay, so I was starting to get bullish on natural gas, and I still am relatively bullish on natural gas if it holds, this swing low here. Even if it comes down and it, sort of test this swing low down in and around here. It's right back to the 61.8% retracement. The reason why I got bullish on it is because it broke this downtrend line and it pushed up into, fib resistance. It pulled back. It looked like it was putting in a decent swing point and a nice trend line at a 45-degree angle, and then it started to push off. This action isn't very encouraging, but as long as it really holds, this swing point, it could really come all the way down and test this low and still remain fairly bullish. So this is a tricky spot to look to set up any new trades, in my opinion, but I'm more bullish than bearish on it. What would really get me excited from a bullish scenario would really be, I guess, at this point, to see it break this trend line or this sort of mini wedge that's ascending triangle, whatever you want to call it. Wedge, I like to call these wedges, but it's really a symmetrical triangle. If it breaks through the top of the symmetrical triangle, that would really get me a little bit more bullish on the natural gas at this point in time. Right now it's sort of in no man's land because it's holding on to the edge of the cliff of support with two fingers here, but it really could find support all the way at the low. If it broke this low all the way down here around, it looks like about $3.05, then that would really change my whole outlook on natural gas altogether. Now, if you've ever traded natural gas, that's a huge range. So I'm looking at this from a chart perspective, and then if we take a look at the gold futures, not really much going on in the gold futures either. Same type of setup where we pushed off, we broke this trend line, we pulled back, we held the 618, but now we really need to break through this minor trend line and this minor wedge. It looks very similar to the chart pattern of natural gas. It's in fact, in my opinion, almost exactly the same sort of scenario from a chart pattern perspective. So there's the gold, same story. And let's take a look at silver quickly. Silver looks almost the same story. Now the trend lines aren't as clean, but just by eye I could see a little trend line from this spike point here, just over 45 degrees, and then you've sort of got these sort of challenge points somewhere in here. So breaking this trend line, the last trend line that I drew there to the high side, would really bode well for a more of a bullish scenario on silver. So the stochastics are buried. The MACD looks like it's ready to roll above its zero line resistance here. From an indicator standpoint, the zero line I consider resistance, or sort of a line in the sand between long and short. So at this point in time, I'd like to see that happen, where the MACD rolls over the zero line to the high side and then breaks this pattern or this trend line resistance. So that's all I really have. There's nothing really going on in the markets today. This video is probably twice as long as it really needs to be. I could have come in and just said, hey guys, nothing really going on here, but I just wanted to sort of review the charts for my own benefit, for everyone else's benefit that's watching this video, and hopefully that helps. And there's going to be times in the market where there's just not a heck of a lot to do, and we just need to sort of sit tight, and we need to just sort of sit tight and be patient and wait for something that sets up and that looks good, and not force trades, not force investments, and wait until that point in time where it makes sense. So that's all I have this week. For those that are watching, hopefully you've received an announcement that went out. We're at the CSTA Oakville this upcoming Wednesday, the 13th at 7 p.m. We have Brooke Thackeray coming out, and he's going to be discussing his 2013 Thackeray's Investment Guide. So that should be really interesting. It's going to be running at the Queen Elizabeth Cultural Center in Oakville, and Community and Cultural Center rather, in Oakville, and it's going to be running from 7 to 9. So hope you can all make it there, and I hope this video helped. Good trading, and enjoy the rest of your weekend. Bye for now.